Hello everyone, thanks for joining us today and welcome to this presentation of where to find trending trade setups. Welcome, my name is Steven Primo, the president and founder of Specialist Trading. Now today I'm going to show you a great way, probably the best way I know of in which to trade in sync with the trend. And then I'm going to share with you an entry technique, a technique that you can actually enter while you are in sync with the trend. It'll really increase your odds for success while trading in any market, any time frame, in any direction. Once again, my name is Steven Primo. If you're not familiar with our website, we are first and foremost an educational company. As you'll see today, I try to educate all my attendees in my webinars as well as my students and members of our courses so that you can ultimately put the power back in your own hands. It's our philosophy and belief at Specialist Trading that the only way traders become truly consistent or successful, in other words, because that's really what it means to be successful, is to be consistent, is by taking charge of your own trading, not relying on outside sources. So that's what we do. We provide you with all the tips and techniques that I've accumulated in my nearly 4 decades of trading. I started trading on the floor of the Pacific Stock Exchange in the 1970s. I was on the floor for a total of 16 years, and 9 of them I was a specialist. I made markets in roughly about 50 stocks, and I traded through the crash of 1987 and the bull market that followed. So I know what works in terms of consistency, and I know what doesn't. So all I do is teach and mentor my students what I actually have accumulated and what I use in my own personal trading as well. Once again, as I just stated, I'm going to show you a great technique, probably the best technique I know of because I've been using it for over 30 years for finding the trend. And then I'm going to show you how you can use this simple technique that I'm sure many of you are aware of, but when you apply it with this trend identifier, you'll be able to increase your odds for success tremendously. But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 methods, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. Once again, we are required to show you this, so while you are taking a moment to look at this, also I would like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there if you haven't done so already. Abbreviation for Specialist Trading. It's at SPCLST-TRADG. Every day I post information from daily financial wisdom to actual signals that our strategies have generated. So there's a lot of great free information on our Twitter page, although it is rather limited. So if you'd like to have a lot more detailed information as well as a lot of educational videos to view, you can go to my sister site has put together a Facebook page, and they are Pro Trader Strategies. So you can go to Facebook, log on there with Pro Trader Strategies, and there's a lot more information about what I do myself, how long I've been trading, and detailed information about our courses and strategies, okay? Now, I often start out my presentations by saying this because I don't want to make any secret of it. I know what a lot of you are going through trading. If you're frustrated, if you're having a very, desperate time trying to trade, you just don't, see things going your way. Even though you've read all the books, you've gone to all the lectures, you purchased all the courses, and you still can't seem to get your head above water. Well, I know exactly what that's like because I went through that my first 2 years of trading. In fact, my first few years of trading on the floor with all that access to all the information, high-speed information, even though it was 40 years ago, it was still relative, better information than most people were getting. I still couldn't find a way to consistently make money. So I was lucky enough to have my mentors take me aside, and they shared with me a lot of the things that I teach in my webinars and virtually all the things that I share with my students and my members in my courses. So here's what I learned trading on the floor of the exchange. These are the same things that were able to turn my trading around, the things that were able to sustain me for nearly 40 years now. Now, please, when you see these things, you're going to see how simple they are, but usually it's the simple things that are rooted in simplicity. Most of the time, we think it's the opposite. We think the more complicated something is, the more convoluted something is, the more successful you'll be. And I found that in my time of trading, it's actually the opposite. It's the simple things that keep you in the game a lot longer. So that's what we're trying to teach you. Now, here's what I learned on the floor. I'm sure most of you know this. This is Trading 101. And what my mentors taught me is that you will increase your odds for success by trading in sync with the trend. Now, everyone knows this. This is what you probably learned day 1 of trading. Okay, everyone knows this, but if everyone knows this, if everyone starts out trading thinking this, then why do upwards of 80% of all traders fail? Okay, I think it's because you're not applying a type of technique or indicator or any type of method that is telling you what the trend is in advance. Usually it's a little bit too late. Let me show you what I mean here by these examples. Let's look at this chart here in HRB. Now let's say you're looking at this example, you're thinking about purchasing this, and after all, it has gone up for the last couple of weeks, but you're still not sure if this is a full-fledged uptrend yet. Maybe this is just a shot, in the pan, and just a brief flare before it heads back down. So you want a little bit more confirmation. So you give it a little bit more time, and it continues to go up. In fact, it's making this kind of like high-level consolidation. So you're convinced you're in an uptrend, so you jump in and buy there. You feel pretty confident, and it's holding there all right. But then look what happens. A week or two later, you're making brand new lows. Okay, look familiar to anybody. Now, it just doesn't happen with stocks. What if we look at the Canadian dollar here? Now, in this daily chart of the Canadian dollar, in this example, the Canadian dollar fell out of bed, but maybe it's too early. Maybe it's going to have a quick bounce back up. Okay, so you don't jump in yet. You want to wait to see if you break that low there. All right, so you give it a little time, and lo and behold, it does break. So you enter, let's say, on this little pullback to the upside. So you're short roughly around here, and you've got a nice little profit, under your belt. So you're feeling pretty confident. And guess what? 2 weeks later, you're flirting with the old highs again, right? And then lastly, we can look at a intraday bar, a range bar of the E-mini futures. Okay. Once again, we look at this example, and the E-mini is taking off, but the E-mini is very volatile. How do we know that it's going to sustain itself? So we give it a little bit more time. And as you can see, we kind of are making this high level pennant here. So guess what? You're going to jump in on this bar because you think we're breaking out of this pennant and we're going to make brand new highs. So you jump in and buy, and you buy at the very top. Okay, do these scenarios look familiar to anyone? I know they do to me because this is the way I used to trade. I was always a day late and a dollar short. I'd always jump in after I got confirmation that we were in a trend, thinking I'm in sync with the trend, when in all actuality I was getting in too late. All right, so I needed something to tell me that the trend had been established far earlier. So this is what most traders go through. They start out with the best intentions, trying to trade in sync with the trend. But what we need is an early trend detector. We don't need some type of indicator or some type of method that is, a day later, a dollar short, that is telling us far too late that, okay, it's confirmed that we're in an uptrend or a downtrend. Well, this brings us to our first method, and this is the PET-D. I have been applying this to my trading for over 30 years. I was introduced to this on the floor of the stock exchange, and this has really turned my trading around because it is the best thing I know of that gets me in sync with the trend. Now, the PET-D is not a strategy. It is not a system, just as if a moving average is not a strategy or a system, or an indicator is not a strategy or a system. It's just a tool, but it is the best tool I know of. It's a proprietary color algorithm that simply colors the bars to tell me what the trend is. Now, the bars are either going to be green, telling me I'm in a short-term uptrend, or the bars are either going to be red, telling me I'm in a short-term downtrend. And that's it. That's all I need to know. I don't need to sit there and wait for higher highs. I don't need to look at a higher time frame to tell me what to do on the lower time frame. Okay? I don't need to look at tons of indicators that all line up in sync, and when everything crosses together, I know I'm either in an uptrend or a downtrend. All I need to do is look at the colors. It's that simple. But let me show you how powerful it is. All right, remember this chart of HRB, how we waited for some confirmation to a break above these old highs here, and this is where we jumped in, and it looked pretty good for a while until we fell out of bed. And we needed to know that we were in an uptrend somewhere down here, right? Well, all you do is add the PET-D, and we can see that way back here, the PET-D had already colored the bars green, so we didn't have to wait for it to go up this high in order to confirm that we were in an uptrend. We knew well in advance that we were in an uptrend. At the same point, even if we did decide to buy here, well, guess what? A week or two later, the bars are turning red. So we knew well in advance of an impending downward move. So even if we had just exited here and gotten out of our initial long trade, we would have most likely just broken even or had a very small loss. And if you're a more aggressive trader, you could have actually used this to get short and reaped all the benefits to the downside because you knew in advance that you were already in a downtrend. You see how the PET-D was already coloring these bars red prior to the downward swing. How about the Canadian dollar? Remember, we had fallen out of bed here, but we waited for it to trade here, and we got into this pullback, and it was a kind of nice little trade here going for us, but then again, we gave everything back on this upward swing. Excuse me. So how could we have found out, maybe up here that we were in a downtrend, didn't have to wait another couple of weeks? We had the PET D. Now we're looking at candlestick bars, and we're not concerned with downward bars to be colored red or to be colored, pink or some color. We're only looking at the color that the PET D gives it. Now the PET D has colored these bars red. In fact, we were red all the way up here, so we already knew well in advance that we're in a downtrend. And even if we had gotten short somewhere down here, we would have most likely just broken even and been able to switch gears well in advance of this nice upward move. Now those are daily bars. Let's go to intraday bars, to range bars. Once again, we got long on the E-mini on this nice little upward move here, this high level consolidation, and we would have got long right at the top. How could we have known that we were in an uptrend, not here, but well back here? Well, you add the PET D, and as you can see, the PET D was already coloring these bars green well before the nice upward move. And as well, it was already coloring the bars red well before the downward move. So do you see how this is such a great tool? It is not a system. It's not telling you where to buy or sell. It's just getting you on the right side of the market. So as you can see, the beauty of the PET D is that it tells you which direction you should be trading. Okay, so you don't need to guess and say, well, that news was really good. I guess I should be buying. Or, boy, that jobless claim that came out. Or maybe, what that guy's telling me in my chat room, he's telling me he doesn't like the stock, he doesn't like the market, so maybe I should sell. Don't listen to those things. There's no consistency in any of that. I stopped looking at news over 30 years ago. I don't believe in chat rooms or trading rooms because these people in there don't know any more than anyone else. What you have to do is listen to what the market is telling you. And the PET D is a translator. It's translating what the market wants to do. So that once you know what direction you should be trading, you can apply any technique, any strategy, or any system to that direction. So it doesn't have to be one of my strategies. It doesn't have to be one of my techniques. It can be something that you've had relatively good success with. It can be someone else's strategy that you went to a course and purchased. Or it can be a technique that you devised on your own. The beauty of it is that you can apply anything, any structure. All you want to do is be in sync with the PET D. And we really strongly feel you will increase your odds for success significantly. Okay, so let me share with you a trading technique then, because I'm sure many of you say, well, Steve, I just started trading, or Steve, the courses I purchased, I threw out the window. None of them work. Nothing's working great. So I don't have any trading techniques. That's why I'm here today. Okay, let me share with you something simple that you can apply with the PET D. I'm going to show you this is just an entry technique. As you see here, we're not saying this is a trading strategy. It doesn't come full-fledged with entry, with stop placement, with exit, but I'm just showing you it's a very high probability place to enter a trade once you know where the trend is headed. And what this is, here are the requirements you're going to need. Obviously, you're going to need the PET D because this is what's going to tell you what direction you should be trading. And you're going to need how to know to apply an inside day bar pattern. I'm sure many of you are familiar with an inside day bar pattern, but let's just give you a brief refresher course. Here is what the standard definition is of this. It's a 2-bar pattern. And inside days are days where the chart bar has a lower high and a higher low than that of the previous day. I mean, that's the conventional way to describe this, but let me just show you to make it easier. This is what an inside day looks like, okay? It's 2-bar pattern. Bar number 1 on the left and bar number 2 on the right, all right? Now, bar number 2's range is inside the range of bar number 1. So you'll usually have a lower high and a higher low. It's smaller, it's within. But for this presentation and for the way we use it at Specialist Trading, it can be equal to or less than, okay? The high can be equal to or less than the previous day's high, and the low can be equal to or higher than the previous day's low, all right? So they can match the previous day, but they must be still inside, okay? Now, here's what most students have a difficulty with. They say, well, Steve, okay, I get the concept, but it's an inside day pattern, so I can only use this for daily bars. I trade tick charts. I trade monthly bars. It does not matter. For all we care, these 2 bars could be 5-minute bars, or they could be 2 monthly bars, or they could be 2 weekly or 2 tick charts. It doesn't matter. So don't let the title inside day fool you. It can be virtually for any time frame. Now, here's the way we want to apply it. This is where we're going to give ourselves a high level of consistency. We're going to look for both bars of an inside day pattern to be colored green. All right, this is our signal that quick upward momentum may continue. And so this is our high probability scenario for entering into a trade. So this is what we're looking for. Now, it does not matter if all of the bars prior to this 2-bar setup were red. It does not matter. All we care about is that these 2 bars of an inside day are green. Now, conversely, let's say we want to go short. Well, we're going to look for both bars of an inside day pattern to now be colored red. It would not care if all the bars prior to that were green, does not matter. As long as this inside day pattern, the 2 bars are colored red, this is your signal that quick momentum may continue to the downside, okay? Quick downward momentum. So this is a high probability area for entry to go short. So this is what we're looking for. Once again, these could be 5-minute charts, they could be 1-minute charts, weekly bar charts, or even 1,000 tick bar charts. It does not matter, okay? So don't get hung up on the time frame. All right, so let's look at some stock examples to show you how well this technique works. But please remember, you hear I just said technique. Don't get confused and think this is strategy, because once we go to the question and answer portion at the end of this presentation, I know the first question, if you haven't asked this already, is, well, where do I enter? And where do I place my stop? And where do I exit? Remember, those are all things that come with a particular strategy or a system. We're just showing you a high probability area for entry. You can apply some structure to this, and we teach you this in our courses. But I'm giving you this for free. I'm sure if you've been trading for long enough, you can either enter at the market, you can enter once price trades above the previous bar's high, you can place your stop at a dollar stop, you can place your stop just below the lowest of those 2 bars. It's up to you. Whatever your risk is, you just double that, and that's where your exit is. There's a number of simple ways to apply some structure to this. I'm just showing you some very fertile ground for entry, okay? But let me show you how powerful this is. All right. Here we look at a chart of GBC coming into February, coming into last month, okay, GPC. Now, obviously, we are in a downtrend. How could we have taken advantage of that? Well, in hindsight, it's easy to say that we were in a downtrend, but how could we have known up here that we were in a downtrend? Well, you simply see that once we changed course here, how could we have known that we were in an uptrend? We add the PET-D, all right? Now, looking at this, look how the PET-D caught all this downward move and how we started to have a splash of green here and then another splash of red. So the PET-D is kind of, oscillating back and forth between trying to decipher and translate what the market wants to do. But once we had a confluence of 2 or 3 green bars, it's off to the races. Now we know the trend is up. But all we care about is this inside day pattern. If we look at the downward moves, well, guess what? The market right here was telling you through the PET-D and the inside day translation, it was telling you to sell, all right? And look what happened. Now, obviously, there was another sell here, but most of the momentum had already left, all right? So we're not going to say that all these techniques work perfectly. We're not going to tell you that you would have made money. Usually, you get the most bang of your buck for the very first setup. But that's okay. Had you done the first one and the second one, most likely you would have been stopped out somewhere around here once the bars changed green, and you could have easily gotten in and made back and recouped some of those losses by all of the inside days patterns up here, okay? About AKAM. Obviously, in hindsight, someone looking at this will say, well, Steve, yeah, it's easy to see we're in a downtrend. I don't need any tool or indicator to tell me we're in a downtrend. Well, sure. But wouldn't you have liked to know you were in a downtrend up here? See, that's the beauty of what the PET-D does. Because once we had the PET-D, we knew well in advance at $62 that we were already in a downtrend, well before the market fell out of bed down to 40, down 20 points, okay? So that's why I say this is an early trend detector. It's not a system, not a strategy. We have to add some structure. So let's add our structure in the terms of inside days. So once we look for the inside days, you think you could have done pretty well using this technique going short AKAM, okay? Had you taken the very first setup, which we always say holds the biggest bang for your buck, well, that's 20 points in 2 months. Now, I'm not telling you that you would have stuck out for 20 points. We're just showing you that that's how much room you had to work with in your favor, Okay, even when the stock had these nice little bounces, okay, and a lot of people are probably saying, hey, well, the institutions are coming in buying, the volume is picking up. This is wave 4 of a Elliott wave move. Remember, once again, there's no consistency. There's too much subjectivity in that way of trading. Much better just to be in sync with what the market is doing. And even when we had bounces and when we kind of stopped here for a while, what was the color of the bars? They were still red. So the Pet D was telling you trend is still down. Why do we want to buy in a downtrend? You only want to buy in an uptrend, and you only want to sell in a downtrend. How about KORS? Okay. Once again, we see here that we have inside day, and I'm showing you this just to share with you that not every trade will work well. Sometimes you get in and there's just a little bit of movement to the downside or to the upside, but not enough for you to actually be profitable. But the beauty of this technique is once the trend changes, it will give you the opportunity to come back in and recoup many of your losses oftentimes. So had you taken this first sell signal, well, initially you had some room to move with, but then the market started firming up, and then you started getting more and more green bars telling you that the trend has most likely changed. And guess what? We have an inside 2-bar pattern here. So you could have covered your short, maybe had a minor loss, and easily would have made it all back with 15 points in just 4 days. Now, obviously, there was some news that came out that made KORS gap open at the beginning of February, about a month ago. All right, obviously, some good news. But how did the Pet D know that we were already in an uptrend? Okay. Did someone call us up and say, hey, if you can configure that Pet D to make it turn green so that it will look like it's in an uptrend so that you can get all your members long. And do you see how silly that is? How people start to get into this type of, these theories and, these victim attitudes of saying like, well, boy, the news comes out and it always catches me off guard. Well, if you have the Pet D is already translating that the market wanted to go higher well before the news came out. So there's no need to get into all these conspiracy theories that insider trading, that people knew this in advance. You could have easily switched on board a full week before by being long. Let's look at MNST Monster. Okay, now this is coming in about a month ago into the middle of February. Obviously, once again, it's easy to see that we're in a downtrend in hindsight, but wouldn't you have liked to know where it will appear? 145. Well, the Pet D did. It was already translating through its formula, its proprietary formula, that the market wanted to go lower. It just translates what the market wants to do. So all we have to do is be in sync with the market. And in this particular study, we're looking for an inside day pattern right here. And even though we didn't get at the top, you could have gone short here and 20 points in your favor in 2 weeks. Now we can also use this on a 15-minute time frame. If you look, let me just backtrack here. If we look at the very bottom of this at the end of February, middle of February, we started to have a couple of nice upward days. Now on a daily chart, these bars were still red. But if we go, these are the same 2 days on a 15-minute chart, well, the Pet D has colored these bars green. So see, this is why we say there is no consistency in using a higher time frame to tell you what to do in a lower time frame. All I have found in my nearly 40 years of trading is that it keeps you out of a lot of good setups, because if I had predetermined that, well, I can only trade the 15-minute chart of the same stock to the downside because that's what the higher time frame is doing, I would have missed out on all of these good setups right here as we look and add the 2-bar pattern of the inside day. So once again, I mean, I don't, in any way require that people use a higher time frame. Excuse me. In fact, I stopped using that technique years ago because all it did was keep me out of a lot of good trades. I would sit there and wait for the 2 time frames to be in sync, and meanwhile, I missed out on a great trade. So I always suggest to my students, listen, if you feel you have to use a higher time frame to confirm the lower one, well, go ahead. But you know what? I in no way recommend that. In fact, in nearly 40 years of trading, I have found no consistency. There's so many methods that really, for some reason, they're conventional wisdom. We've all been taught they're supposed to work, and there's no consistency at all in them. So that's what my mentors taught me. They taught me to strip away everything that was just really useless noise and just focus on the things that work. And so that's what I do with my students. Once again, if you feel you can't cut the umbilical cord and you have to look at higher time frames, then by all means, go ahead. But it is in no way required. Now let's look at AVGO. This was just a few weeks ago, okay? Now someone looking at this would say, well, it looks kind of like we're heading higher, but Steve, I'm not really sure. Maybe we're going to roll over and come back and meet those lows we made in February. Well, sure, all you have to do is apply the PET-D to really find out what the market wants to do. And the PET-D has been green this entire time. So this is just telling you that the market, through its translator, is saying, I'm going higher. So if you want to jump on board, all you have to do is look for a 2-day pattern. That's the structure we're using today. Now, obviously, there are many different techniques for trading with the PET-D. This is just one of them we're giving away to you for free. So you could have gone long here, even though someone would say, well, gosh, Steve, I'm getting long at the very high of this move here. How do I do this? The second day of March, and AVGO is making you highs here on a short-term basis. I don't want to buy at the high. Once again, quit listening to these outside sources. If it's someone in the chat room or what you've been taught, just listen to the market. The market is telling you through the PET-D it's going higher. The 2-day pattern is telling you this is a high probability area to enter, so just jump on board. And guess what? 16 points in 3 weeks, okay? Now AVG is much, much higher. Now, here's where news comes in. A lot of people always say, well, Steve, sure, this probably works great, but once news comes, it's not a very, prominent factor, because news really will outshine anything else. You'll be on the wrong side of news most of the time. Well, sure. Once again, I'm not going to say that everything is 100% foolproof, but it's been my experience that the PET-D, along with the tools and also with the structure that we teach our students, oftentimes are in a trade well before the news comes out, and oftentimes they're on the right side of the news. For example, as we see here last year in October, middle of October, the news everyone heard about Weight Watchers, where Oprah Winfrey invested in Weight Watchers, and the shares doubled, okay? The stock went up tremendously off this news that she was purchasing a large portion of the company, and with her name and her backing, the company took off. This was in mid to late October. So let's look at the chart. This is when the news came out, right here, okay? Here's the news, and obviously when it did, it gapped up very strongly. A lot of people often say, well, boy, after the stock gaps up from roughly $6 all the way up to 15 or 16, it's kind of too high for me to get in. It's already up, 100%. I don't want to jump in that much. Well, here's how you could have gotten in sooner. Well before that news came out, well before anyone knew that Oprah Winfrey was going to be involved in Weight Watchers, we look at this weekly chart here. We have been in an uptrend with the PET-D. The majority of the bars prior to that, going all the way back to August, a full 3 months prior to the news, the bars were green. So if you were looking at the stock and you were interested with your own investments, look at all the different signals. Not that some guy in a chat room was telling you, not that some guy in a webinar was telling you, not that some trading guru was telling you, not that some convoluted strategy or system was telling you, but the market, the only thing you should be listening to, was telling you, we're going higher, we're in an uptrend, and here's some structure, some high probability areas to enter. You had 3 chances prior to that news event, all right? And then you could have had 20 points once the stock gapped up really quickly. Now, even after that news came out, where you start to second guess yourself and say, well, I'm not going to buy it here, guess what? There was another inside day pattern on this weekly time frame. You could have still purchased roughly around 16, and the stock went up to 28 in the next 3 to 4 weeks. Now, I want to show you this older chart of the industrial average. If we remember last year, almost a year ago in August, September, the market really fell out of bed. A lot of people thought the market was topping out. There was a lot of news about China, bad news. People were saying, boy, this market just fell out of bed, came out of nowhere. I believe the market was down 1,000 points intraday, one particular day, all right? When things like this happen, most traders, the traders that aren't successful and they have a losing mentality, they always like to blame someone. And so all I heard that month was, there's no way we can compete against this news coming out of China. There's no way we can compete against the big institutions. There's no way the little guy like myself with a small account can compete against these, high frequency trading systems and everything of that nature. All right. First thing I teach my students is to just let go of that mindset, because that's a losing mentality, and regardless of what I teach you, you will still lose if you hold on to that mindset. There is nobody that you're competing with. There's no one that has a better advantage than you. everyone starts the same day with the same amount of hours, all right? The only thing is, as a member of Specialist Trading, you have privy to these things that I've been using for nearly 40 years that are translating what the market wants to do. So if we look at this daily chart of the industrials, we see here that going all the way back to July of 2015, the market was already telling us we were in a downtrend because the bars were red. So there was no reason to lose money because are we going to be buying in a downtrend? No, our philosophy is if the market is in a downtrend, we only look to sell. We don't hold any long positions. We only look to sell, and we only look to go short, or else we're on the sidelines. If the market is in an uptrend, we're only looking to buy. So we knew as far back as July that the market was in an overall downtrend. So there's no reason any of our members would have lost money because we knew that the market was going lower, okay, until we had a confluence of green bars. And then, by the way, if you wanted to add this simple structure, look at all the signs that the market was telling you in advance that, you know, you had some structure to go short. These were high probability entry areas, okay? So there's no reason to have a losing mentality, to think that the odds are against you because you have a small account. You know, I don't want to hear that from any of my students or my members. This is a losing mentality. Most people, no matter what, you know, trading tools they're given, will lose because they just view themselves as, you know, always a victim compared to someone else who has more advantages than them. You don't. You see the same things that anyone else does, and you could have taken advantage of this major drop that happened where the Dow fell 2,000 points in just 2 weeks. So you would have known well in advance that that was coming. I want to show you this chart here of IWM. This is the ETF for the Russell Index, okay, the IWM. This is coming into this past month, so this is about 3 weeks ago. Now, looking at this, someone would say, well, there's no real clear-cut trend, Steve. We kind of fell out of bed, then we're bouncing back up. It looks like we're in a range here, all right? That's the way most people determine what the trend is. The way we determine the trend is, well, first of all, we see that we had an inside day, but we determine the trend here by adding the PET D. Now, obviously, we were in a downtrend. But the last 3 days in the middle of February, we were green, and at the same time, we had an inside day pattern, all right? So this was a buy signal in mid-February of this past month. And look what happened. The IWM, the ETF, went up 8 points in 2 weeks, but that, you know, represented a 600-point move in the Dow, okay? So you see how you can apply this to ETFs. You can also apply the same technique I'm sharing with you with gold, okay? Commodities and futures. This is a chart of gold. Now, a lot of people have been saying, boy, gold really took off from the beginning of the year. How would we have known it was going to be so strong coming into March? Here's a pretty recent chart coming into the first couple of weeks of March. Well, sure, in hindsight, it's easy to see that we've been going straight up. How could we have known well back at the beginning of the year, though, that we were going to be heading higher? We had the PET D. And you see right there in the lower left-hand corner, the very first week of January, what do we see here? We have green bars colored by the PET D and an inside day pattern, what I've been sharing with you today. So don't you think you could have taken advantage of that? Well, you know, well below this big move, and we all see what's happened. And once again, even if you don't catch the first move, the market always gives you other chances. Second, third, fourth, fifth, sixth, maybe even 10 chances. Look at all the inside days here on this chart of gold, okay? So the market is always telling us what it wants to do. Our job is just to jump on board. Our job is not to pick a high. It's not to pick a low. It's not to figure out what the institutions are doing. It's not to figure out what the wave count is. Our job is not to use tons of indicators. Our job is just to listen to the market, have the market tell us what it wants to do, and then jump on board in that same direction. That's it. It's very simple. It's just that we have to make it really complicated for some reason. All right, let's go to an entirely different market. Let's go to the E-mini for all you E-mini traders there. All right, here's a daily chart of the E-mini starting at the beginning of the year once again. Okay, obviously in hindsight on this daily chart in January, someone's saying, well, yeah, Steve, the beginning of the year, the market was really falling out of bed very quickly. And looking in hindsight, it's easy to see that we were in a downtrend. Sure, but we knew well before that, well before the beginning of the year, that the bars were already red. And in fact, we had an inside day the very first week, and we had followed by 2 inside days. So that's 200 points in 2 weeks, okay? 200 points in the E-mini roughly comes out to 13 to 1500 points in the Dow. So we knew well in advance we were in a downtrend. Remember, when you're in a downtrend, you only want to be a seller or on the sidelines. You don't want to be a buyer. Let's go to a smaller time frame. Here is a 30-minute time frame just last month, about 3 or 4 weeks ago in the E-mini. Here's a 30-minute time frame. Looking back in hindsight, sure, it's easy to see on this particular day we were going up, but what if you had access to the PET D as well as knowing this inside day pattern? Well, you could have purchased there, and look at all the gains that were made to the upside. And you had another chance to get long here if you missed that. And one more chance to get long. That's 15 points in one day, okay? 15 points in the E-mini. That roughly comes out to about over 100 points in the Dow, or about $750 per contract. Let's go to a different time frame. Let's go to 15-minute time frame. Once again, we see here in hindsight, well, we're going higher. How would we have known we were going higher, though, well back at these lower levels? Wouldn't you have liked to have known that we were in an uptrend well back here? Well, you just add the PET D, and the PET D has been green since the very beginning of these 2 days here. Once again, it is the best translator I know of what the market is doing. Most people find out what the trend is too late, and then it's too late to do anything, or else you really cut down your odds for success significantly. But if you know in advance what the market wants to do, then your job is simply to look for that 2-bar pattern. And had you taken advantage of the very first one, well back here, well, that's 40 points, or roughly $2,000 if you had held on your position for 2 days, okay? Now, once again, we're not telling you that you would have held on for 40 points, but that's how much room you have to work with these high probability scenarios here. In fact, let me just show you that we're not cherry picking. Let me show you what happened today. It started out yesterday coming into the opening of today. This is a 10-minute chart of the E-mini, as we see here. The beginning, this was the 22nd, and starting out for the 23rd. Now, this was the last, roughly the last 3 or 4 hours of the day. We had a nice run up, and then we were followed by a sell-off at the end. Let's say you wanted to hold your position overnight. Well, we see here once we had the PET D that, well, we knew we were in an uptrend well back here, and we had a nice inside day pattern. It didn't really amount to much on this 10-minute pattern, but you had roughly anywhere from 2, 3, or 4 points to the upside in which to trade with. But as we see towards the very end of the day, in the last hour, we had a sell-off, and we started to turn red, and we were met with 2 inside day patterns to sell, all right, both colored red by the PET D. Now, if you wanted to hold a position overnight, let's say you had exited your long position, maybe you broke even or had a small loss, and you're deciding to go short, holding it in. Well, the very hour of today, that would have been 7 points in your favor in the first hour, because look what the market did. We gapped down, and that was 7 points, so roughly $350 per contract. If you had 10 contracts, that's $3,500, okay? But just to show you how we see these all the time, this was just 24 hours ago. And I'm sure as we've been speaking, there have been a lot more examples happening in the market as well. This is a static PowerPoint presentation. I'm sorry, I don't have access to live charts here. Lastly, let's go to the Forex markets, because these same techniques will work in any market in any time frame. Here's a monthly chart. Now we're looking at monthly charts of the Canadian dollar going all the way back to 2013. Once again, someone looking at this would say, well, yes, Steve, easy to see we've been in an uptrend, but wouldn't you have liked to know we were in an uptrend somewhere well back here, well before these large gains happened on a monthly time frame? Well, sure, the PET D was already coloring these bars green well before we started to have this tremendous move to the upside. In fact, had you taken advantage of the very first inside bar patterns here, it would have been 4,000 pips to the upside in the next 2 to 3 years. That's $40,000 per contract. Now, that's a monthly chart. Let's look at a 30-minute chart of the British pound. We see here that the initial part of this day we were going higher, but once the trend changed, we went lower. So all we have to do is trade in sync with the trend. The PET D is translating what the market's trend is. Then we just apply some structure to tell us what direction to trade, okay? So we could have gone long the entire time in this 30-minute time frame, and then once the trend changed, we just go short, okay? Either way, you could have accumulated roughly about 100 pips in one day, or that's roughly about $1,000 per contract. Now, here's one of the best things about the PET D, which is extremely important because we know we have a lot of our members and students like to trade long-term in terms of their IRA accounts or for their long-term portfolios. Well, the PET D is just not something that only can be applied to day trading or swing trading. It can also be used as a great long-term trend identifier. Let me show you what I mean here. Here is a monthly chart of the S&P 500 index going all the way back 20 years, a little over 20 years actually, about 26 years, back to 1995 if you look at the lower left-hand corner. Now we see all these swings and these peaks and valleys, what has happened in the last 26 years. We see here that we really had a nice upward move from 95 all the way up to 99, 2000, and then we hit the dot-com crash and things came sliding down. We had a very strong crash from 2000 to 2002, 2003. Then we firmed up again until 2007, 2008, and the financial or banking crisis hit, followed by another strong recession, strong downward move in the index, okay? Now, roughly in 2009, 2010, we firmed up, and we've continued to go higher, but a lot of people are calling for some type of topping action again. In fact, as we see here, these last two bars or the last 2 months, they're basically January and February. And so we're wondering, is this the top? Are we going to have a large correction again, maybe lasting 2 or 3 years? And should I get out of my long-term portfolio investments? I've done fairly well this last 3 to 5 years. Or maybe I should buy more. How do I know? This is the beauty of the PET D. When we're applying the PET D, we still apply it the same way, but we just want to add one thing. Our way of finding out long-term of when a trend has changed is when we see 3 consecutive bars of the same color. That tells us that we are confirmed that the trend has changed. So all along the time from 1995 to 2000, we were going higher. Sure, we had a couple of red bars here, but remember, we need at least 3 to tell us that the trend has changed. And because we only had 2 red bars, we don't exit our positions, and we can see that we continue to go higher. Now, right here in 2000, the end of 2000, we had 3 consecutive red bars. You could have exited, not at the top, because we know nothing works that way. Don't ever think you can get out the exact top or get in the exact bottom, but just close enough to these levels because you'll still save tons of money. You could have missed this entire move down for the next 2.5 years. Now, once we had 3 consecutive green bars, that's your signal to get back in. You could have ridden this entire rally from 2003 all the way to 2008. When we had 3 consecutive red bars. And right here, you're exiting your long-term positions, and you would have missed the brunt of the crash here going into 2010 when we had 3 consecutive green bars again, and you've been long ever since. Sure, we have a couple of red bars, 1 red bar, but remember, we need 3. Now, here's the last 2 months, okay? March is going to be over in about a week. Wouldn't you like to know what the color of this bar is? Perhaps it's red, which would tell us that we are going into a sustained downward move. Or perhaps it's green, telling us that there's no confirmation to go short. We are still in an upward move. This is what the PET D will give you. It will let you know where we are long term, so you'll know how to trade your long-term investments. So you see the PET D can be applied to short term, but it can also identify long-term trends as well. All right, so let's recap. We share with you a simple trading technique using the PET D. This is the inside day pattern that pinpoints quick momentum moves in any direction and in any time frame. Here's what we're offering all of our attendees today. We're offering a great discount on our roadmap for any market. This is the PET D or the Primo Early Trend Detector. It truly is a roadmap, and it's an early roadmap because it tells you, as you just saw in all these examples in all markets and all time frames, how it oftentimes will tell you what the trend is before a big move happens. You're going to get the proprietary color bar algorithm. It includes the add-on, which will automatically change your bars from green to red. This also includes 2 continuation trading techniques, 2 pullback trading techniques. It also includes within the course a trailing stop technique. Now, you can apply this to any market, any strategy, in any time frame. And included with this, you get my lifetime personal correspondence as your mentor. You can email me anytime you like with any questions about trading, about applying the PET D as well. Now, I know a lot of you after seeing this would say, well, you know what, Steve, I see what you mean here, but I really don't think I need this because let's look at this example in CRM, okay? As we can see here, it's obvious to see we're in a downtrend, okay? So why would I need the PET D? We're most likely in a downtrend. Most likely if I had the PET D, all these bars would be colored red, okay? And what do I have here? Okay, we're in a downtrend and I found an inside day pattern. So why do I need the PET D? Because I'm just going to, use conventional wisdom. We obviously are in a downtrend, and I'll sell right here, right? And then look what happens. Okay, this is what will happen most of the time if you don't have the PET D. Because if you had the PET D, you would have seen that you're right. The majority of these bars were red, but right here, you had one red bar and the other bar was green. Remember, we need, in order to sell, 2 red bars of an inside day pattern. And as you can see, one of those bars was green. So because of the PET D, it would have kept you out of this trade entirely, and you would not have lost any money. In fact, had you had the PET D, you could have used it to apply these inside days right here and actually made money on the long side. So that's why it's important to have the PET D. Sure, you could be able to second guess it every once in a while and it'll work, but the times it doesn't work, such as in this scenario, you'll give back a lot. Why not just become a member of Specialist Trading, become a part of our PET D course, become a student of mine with this special 2016 special. Okay, now the PET D is probably one of our most popular as well as powerful tools, all right? We are thinking of it licensing it at the end of the year, which means we'll probably increase the price tremendously. We have a lot of hedge fund interest in this. We have a lot of people that use this that are professional traders that would love to purchase it. And so we're thinking of going along the route of possibly licensing this where you'd have to pay for it quarterly or even monthly, all right? But we haven't done that yet. So here's what we're offering you today. We can give you our discount, which is simply a one-time down payment of $14.95 with $97 per month. But this is for a limited time only. Now, if you'd like to purchase it outright and not have to worry about any payments or any price increases, well, you have lifetime access to the PET D for $24.95. Okay, but you must take advantage of this quickly before there's any changes in this. If you do a Google search on us or any of the PET D users, there's tons of people that have had tremendous success that just started using the PET D. Now here's how to take advantage of this. Remember, once again, I said my sister site is Pro Trader Strategies. They market and promote all of my courses. You can email them at the address given below there, or you can actually call them directly for any type of a payment plan. You can structure some type of a payment plan, and they will be able to put that together for you. Now, if you see that link there at the very bottom, that is a link to the course. And you can actually just apply that link, but you have to actually copy and paste that. If you'd like to get a live link that takes you directly to the course, if you look in the chat box on the far right-hand corner of your GoToWebinar page, you'll see they've posted a live link there. All you have to do is click that on. It will take you to that page. There's a lot more information. You can find out more about the PET D. But if you want to take advantage of this great discount, I would really take advantage of it now before there are any increases or before we go to the route of a licensing where most likely the price will go up significantly, okay? I'm going to keep all this information here. I want to thank you all for holding off on any questions, but I will open up the question and answer box right now, and I will answer any questions that you may have had. Keith is asking, why are some of the candles solid color and other just outlined in the same color? Okay, Keith. This is probably the most common question we get with candlestick traders, and I have to give you a little history. Candlesticks, in their most conventional way, the way they were brought over from Japan, were just 2 types of chart. They were either dark or a dark body, which was black for a down day, and a hollow body for an up day, and the background was usually white. Okay, so if you had an upward day, you simply had an outline of a black outline and then the candle wicks. Okay, if you had a down day, you had a black bar. It wasn't until Americans started using candlesticks that we started, for some reason, coloring these bars, because I think Americans couldn't understand the concept. So a lot of charting software would color them red or color them green to let you know if there was an upward day or a downward day. In Japan, they were never used this way. So we use the candlesticks in their conventional way, where a down day is dark and an upward day is simply hollow. It just has an outline. Now, once you apply the PET D, let's say that the bars are green. Even though you have a downward day, the PET D is still coloring that green. So in other words, you have a darker shade of green telling you it's a down day, but it's still in an uptrend. In other words, you can have a down day and an uptrend. That's why you're seeing the difference in shades, the difference in color. And you can have an up day and the bar is green, colored green, because the outline is green because it's an upward day. So that's the way we use it. It is by far the most conventional way to use it. It doesn't use the contrived Americanized way of viewing it. We're using the traditional candlesticks where a downward day is black and an upward day on a white background is black outline, okay? Now, if you, once again, this has been recorded. I see a lot of people came in later, had difficulty. All you have to do is contact Pro Trader Strategies, as you see right here in front of you, and they will send you a link to the recording, okay? Steve is asking, if you have an inside day 2-bar set up, do you enter the day after the second day setup, and how do I determine the entry price? Remember, once again, I said, Steve, at the beginning of this presentation, this is just an entry technique sharing with you high probability spots for trading, all right? It's not a strategy, it's not a system. In order to have that, you have to have entry rules, you have to have stop placement, you have to have exits. And I stated this roughly about an hour ago. This is all something we teach in the course, but this is very easy. You know, there's no right or wrong way. Some of our traders like to, you know, enter on the close of that second bar. Others like to trade when they trade one tick above the high of bar number 2. Others will go long once they trade one tick above the high of bar number 1. Okay. Some traders, you know, like to use a dollar stop. Others will place their stop below the low of those 2-bar pattern. Some traders will say, well, if my risk is 2 points, then I'll exit with 4 points, twice my risk. So it's very simple to put some type of structure to it. But remember, this was a trading technique. We didn't say we're sharing with you a strategy. This is in the course. We give you more and more of these techniques, but this is all taught in our courses, you know, in our trading strategy courses. What we were sharing with you today was just high probability entry points. And as you saw, and if you request a link to this recording, you can go back and study and see where would be the best place of entry for you. Okay? So once again, we're sharing knowledge with you, but you have to put the power in your hands. We're not going to just tell you, okay, buy here, sell here, place your stop here, because as I said in the very opening statements, the reason why most traders fail is because you basically give away your power. It's our job at Specialist Trading to provide you with tools and techniques and information and knowledge that have stood the test of time, but ultimately have you make your own trading decisions. So we go over everything with you, but then we give you all the tools and different variations. Ultimately, it's up to you to decide how you want to enter, how you want to exit. But trust me, we give you tons of variables of where you can do that, but that's all in our courses, okay? Now, once again, the PET-D is something I have been using for nearly 40 years. It's a very simple formula. It's a calculation, but we're keeping it in-house at this time. What I can tell you, it's based off of momentum. Now, here's the one thing. There's so many people on the internet or in chat rooms saying that they figured out what the PET-D is. They know the exact formula. They can sell it to you, or they have it. It's easy. It's based off of moving averages. It's based off of oscillators. It's based off of the tides of the ocean. It doesn't matter. And the point is, it wouldn't matter even if they had the correct answer. I can tell you that they're all incorrect. But even if they did have the correct answer, that wouldn't matter. They would most likely lose money. Because the point is, what we're offering you in this course is not just simply a color bar algorithm. We're giving you nearly 40 years of experience on how to apply it. Because as you just saw in that last question, most people would not know how to apply it correctly. They try using it as a topping or bottom formation. They would try to second guess it. They wouldn't know how to implement it correctly, and most likely they'd lose money. So the secret is not in the formula and the algorithm. The secret is in how to apply it correctly, and this is what I teach you in our courses. You have me as your personal mentor that's been using it for nearly 40 years, okay? Mike asks, he says, gold has been in an upward trend. Today's downward movement, does the PET-D change it to a downtrend? Well, you know, Mike, I'm sorry, this is a PowerPoint presentation. I don't have access to the live charts right now. I'll check it as soon as this presentation has concluded. But, you know, many times you'll have a downward day and the PET-D will still color the bar green, as you saw in today's presentation. You know, I showed you that that monthly chart of the Canadian dollar that we just saw before entry, and many of those days were down, or months I should say were down, but the bars were still green. So, you know, it all depends what the formula and the algorithm is calculating. In conclusion, as we close here, this is a great investment, I really have to say, in my opinion. If there has been one of the major 2 or 3 things in my trading career that has turned my trading around, that has been able to sustain me for nearly 40 years, it's the PET-D. I've used it nonstop, as I said, for over 30 years, and it is really one of our most popular and powerful tools we have at Specialist Trading and Pro Trader Strategy. So if you're really interested in turning your trading around, I mean, think of your trading. If you started out 2016 with all these hopes and goals and dreams, and if you haven't met them, I really feel strongly that you'll be able to do that if you have the PET D on your side, okay? Because the PET D will get you in sync with what the market wants to do. You saw in all the examples, oftentimes it will tell you in advance of a large move. So you won't have to worry about news. You won't have to worry about using tons of indicators. You won't have to worry about some course you paid thousands of dollars for and it doesn't work. I just showed you tons of stuff, even things that happened in the last couple of days, of how well it works, okay? So come on board. I think the best thing about this is you're getting me as your personal mentor with nearly 40 years of experience. I'll be there right alongside with you trading it and answering any question that you may have. And that's lifetime correspondence. That's not just something for the next, 6 months. As long as I'm trading, I'll be your personal mentor. So step up, become a student of mine, and I look forward to all of you becoming members of the PET D course and also students of mine. Thank you so much for attending today, and I all wish you the best of luck trading. I'll see you next time. Bye-bye.